I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. An ongoing dry weather pattern will likely lead to more drought development in the Midwest and Plains over the next month. The National Weather Service's Climate Prediction Center released its monthly drought outlook for October this week, highlighting that development. Below normal precipitation and above normal temperatures over the next 15 days could cause further deterioration in parts of Iowa, Nebraska, Kansas, Oklahoma, and Texas. Meanwhile, parts of the southeast and eastern Corn Belt could experience some drought improvement, primarily due to the remnants of Hurricane Helene that swept through the region at the end of last month. Limited rainfall this month is expected to aid fall harvest in the Corn Belt. However, dry conditions could challenge post-harvest field work. Pasture and rangelands conditions have fallen significantly this spring as soil moisture deficits grew throughout the plains. Eric Snodgrass with Nutrient Ag Solutions says states experiencing drought could continue to feel the effects in the spring if relief is not come this fall.
What I'm most worried about, I'm just going to echo the same thing we've been talking about for the last few weeks, is this. Our soil moisture values are so depleted throughout much of the plains, the Missouri Basin, the Mississippi Basin, and parts of the Ohio Basin, that if we don't see correction on this in fall, then we'll carry this drought all the way till spring. And that'll be a situation that spring will be very, just be vulnerable. It'll just be very vulnerable to the fact that we don't have the moisture there. Meaning, if we don't get just-in-time rains next spring and summer, this is going to be an area that's not going to have the moisture in place to develop a good crop.
Be sure to watch the full Farmer Forecast interview for the latest short-term and long-range weather outlook in the mobile app. Falling U.S. diesel prices could offer better pricing opportunities for producers this fall, relieving some operational cost. Diesel prices have been below year-ago levels for much of the year as U.S. inventories recovered from seasonally low levels in 2022 and 2023. That was due to weaker distillate demand for parts of the year as well as strong petroleum refining. Last month, on-highway diesel prices fell to the lowest since October 2021 after 11 consecutive weeks of declines. Energy Information Administration data on Monday marked a second straight week of increases since falling to those multi-year lows. More widespread facility maintenance in August drove soybean crushings away from their historical highs during the month. The USDA's latest fats and oils report showed that processors crushed 168 million bushels of soybeans last month, down 13% from the previous month and 0.6 behind the same month last year. Oilseed processors typically slow down crushing rates in late summer for seasonal maintenance ahead of the fall harvest season. Soybean oil stocks tightened during the month, with inventories contracting nearly 9% year over year to 1.6 billion pounds. That was the lowest August print since 2015. Meanwhile, ethanol processors maintained their seasonally high corn crush volumes. The USDA's grain crushings data showed that processing totaled 473 million bushels in August, down 2% from July's all-time high. Crushings remained 7% above year-ago levels due to lower corn prices and favorable margins. Meanwhile, dry distillers grain production with solubles totaled 1.8 million tons, down slightly from previous month, but still up 10% from last year. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.